Welcome back, everyone. Today, I decided that I would like to talk about the investment case for potash, or potassium chloride as the molecule is called. So, potassium chloride, for those of you who don't know, or potash, is a crop nutrient, something that helps grow crops. I mean, that's the idea, and that's why it's a big industry, big mines. I'll get more to that later, but hopefully, food is a growth industry. Hopefully, I mean, you know, as more people come out of poverty, as more people have more money or more food is able to be consumed, more people, all that contributes to more food demand, and the need to have nutrients to grow more food. So, how much is it a growth industry? Well, honestly, I don't know. It depends on so many factors that I could have a multi-million dollar team of research analysts trying to predict exactly how much the food demand will grow, and we'd still get it wrong. So I don't know exactly how much the food industry is going to grow, but it should over the coming years and decades. Now, there are a number of I don't knows in this case. As I mentioned before, I don't know the exact supply and demand numbers, don't know exactly the effects of that weather change and volatile weather, carbon emissions, global warming, who knows? I don't know exactly what the effects of that are going to be on the food industry. Weather has become more volatile, that has been remarked. And so who knows what effects that might have where with growing food. And we don't know the effects of future technologies that could have on maybe we'll be able to grow food underground in the winter. I don't know, but I'm just saying there's a lot of there's a number of unknowns here, and it's not a um, one-to-one correlation between potash demand and food growth. So you may be wondering now, if I don't know what the supply is going to be and I don't know what the demand is exactly, how am I able to invest in something like potash? And that's a great question. And the answer is that if the general thesis is correct and the general trend continues, this will be an industry in need of expansion. There will need to be expanding capacity to produce potash. Now, how will that affect the price? Well, it would mean that we're going to need more and more, which means that the price would need to be in an expansionary terms. And so as demand increases, more of the existing capacity or new capacity will be needed, meaning prices should be supported and the price should increase over the long term. And as I will get into more in a second, potash mines are very expensive to build. New potash mines are many billions of dollars and have a very long build time, which means that if the industry is indeed going to be growing, the prices will need to incentivize that type of production. And let's just say the prices, if it's $200 a ton, is not going to incentivize the price, not going to incentivize production, I should say. Now, some of the bears might point out that according to virtually all estimates, we currently have some overcapacity in the potash industry. And I believe that as well. So why am I investing in something that there's overcapacity? Well, overcapacity doesn't necessarily mean oversupply because much of this capacity would need higher prices to come back, and that's already a win based on the entry point for potash that we're currently looking at. But that's the case for potash, I should say. In terms of this overcapacity doesn't necessarily mean oversupply. Why? Because much of the potash production is controlled by an oligopoly. And to those who don't know what an oligopoly is, it's when a very few amount of players basically have control over a market and it leads to benefits. Now, to one that might think about how what type of benefits that would look like, I would say, for example, in Canada, we have six, well, eight banks. I mean, the US has hundreds, thousands. And I mean, the six banks in Canada, conspicuously or inconspicuously, are some of the best performing stocks over time, which is surprising in a low rate environment, but that's a topic for a different video. The point is here that very few players control a lot of production. And this means that they can reduce or increase production depending on the price, so the price doesn't fall and get crushed by the market, oversupply, and then spend many, many years in terms of no one making money because everyone kind of agrees to let everyone make money, basically. Now, growth over time, as I mentioned before, if the industry is expanding, will lessen the overcapacity because more of it will be needed and eventually new capacity will be needed. So the point is, even now, if you want to get to this higher level of utilization rates, you need the price to go up, and that's how the market is supposed to function. So when we're looking at potash, the simplest way to play this in terms of investment, and there are some other ways, and I've hinted at some in the past on this channel, and I may speak more about them soon in the future. But the simplest way to play this is the big mine simple thesis. And by this I mean you buy an existing potash mine. Now, why is this? Well, many of the mines that are currently in production will probably outlive your children. And I'm saying this in a way where I mean that some of these mines have hundreds or more than 1,000-year life in certain cases, supposedly. Now we'll see obviously on those, but very long life mines. And so what you'd be buying as an investment case in one of these massive, massive mines is an inflation hedged cash flow at the price of a commodity that's maybe facing a short-term hiccup, but is unlikely to last hundreds of years of low prices. So in that case, it's a very interesting long-term investment thesis from if you can get in at a decent entry point, which I think we may be at around now. And to further the point about why you don't see mom and pop's potash mine, well, BHP, which is the largest mining company in the world, they are interested in potash. They named it one future mineral, future market, something like that. And the budget for scoping work, basically this isn't construction, it's just can we do this the way we think, was 2.7 billion US dollars. And of course, as what happens in mining, there was a cost blowout. So they had to increase the budget by $272 million. And again, if they want to construct it, they will need, well, sorry, they budgeted 5.5 billion plus another three stages of 4 billion each to get to full capacity, not to mention the 5 years needed to construct the mine. Now, if this sounds like a lot of money and a lot of time and a lot of risk, well, that's because it is. And frankly, the budget probably, as we just saw with the scoping work, probably is on the low side. So here, to review what I see in the thesis, cash flow machines at an attractive entry point with tempered price expectations. I mean, don't be thinking, I mean, I'm not thinking, again, this is not investment advice, but I'm not thinking, oh, the price is going to go to 800 bucks. It was in the past, but it's not, it shouldn't. But it may. But that's probably not the best way to go into this investment thinking, because remember, it's cyclical, but from here, attractive entry point. If you look at the companies, they're massive companies. Many of them pay decent dividends. You know, just have realistic expectations, and I think this is probably a good point. Now, the point that I'm more so looking at is I believe that the price of potash has limited downside potential from the lows that we saw this year. Now, could it stay here for a while? Could it make slightly new lows? Could the stocks decide that the valuations are too high? Yeah, that's possible. But again, we're in a zero interest rate environment. There's a lot of uh, potential, and the way we only get out of that is from inflation. And inflation, well, again, this should be relatively hedged to that inflation. So the way I look at it, low risk, simple thesis, cash flow. It doesn't have to be more complicated than that all the time. Now, I just want to conclude with this little checklist that I keep in mind when I'm looking at a new investment thesis. The first thing is, do I think there is upside in the commodity price? And in this case, yes, I think there is upside in the commodity price, and I don't think there's much downside. So in that respect, yes, check there. The next thing is, if the price is flat in the investment, let's say the company, forever, am I okay with that investment? Isn't it all right investment? And in this case, I would say, yeah, it is. Then part of this is because the companies, and this feeds into number three also, the companies, as I mentioned, are kind of in a almost, well, oligopoly situation in terms of it's nice to be in an oligopoly because you can use the money to make more money, pay dividends, do whatever, not whatever you want, but to provide some return on the investments. It's not purely cyclical upside and then cyclical downside. You could use the money for effective purposes. And three, in the investment, is there more upside than downside? And in that case, owing to what I mentioned, upside in the price than downside, yes. Plus, is there enough upside to be worth the investment? And here is the part where it gets very personal. Personal for the person trying to answer these questions. And in some cases, I would say, yes, there's enough upside to be worth the investment, but that 100% depends on personal returns. And there's a number of ways to play this thesis and a number of investment buckets that you could put it in. For example, you could buy Nutrien and just put it in your dividend portfolio and just be happy and probably, hopefully, do well. Again, not investment advice here. I'm just saying. Or you can buy something more speculative, and then in that case, you might have more upside, but less dividends and other stuff. So that's the questions that I think about when going into a new investment, and I think this checks those three boxes. Well, that's all for today. Thanks everyone for watching, and I'm really curious, are any of you invested in Potash? If so, how are you playing it, and what is your main reason for it? Is it just a hedge in your portfolio? Do you like the part in the price cycle? Do you think that there's going to be volatility in the agricultural sector? Or are you just betting on global growth? I'm very interested, or something else. Absolutely could be something else too. I'm very interested in knowing. And until next time, I hope you enjoyed. And have a great day.